Good afternoon, all. Hello. Are we there?
Hello. Yeah, good afternoon, Ambrose.
Good afternoon, all.
Good afternoon, Mr. Ambrose.
Yeah, good afternoon. You're all welcome. Let's pick one. Let somebody pray for us. Short prayer, please. Very short prayer. Let's start.
Let us pray. In Jesus' name.
Yes.
Together again this Saturday. Thank you for thus far you have helped us. We thank you for the facilitator you have been using for us all these times. We give all praise unto you. And we ask that even as we go on today, you will help us to be able to see what you want us to see, to know what you want us to know. At the end, we will give glory to your name. In Jesus' name we have prayed.
Amen. Thank you very much.
Amen.
That's short one. I love that. Yes, today we are looking at the market because the earning season has started. Honestly, I'll tell you. But before I go further, I want to appreciate those that pray, that send gifts, that a lot of prayer, wishes here and there for the birthday. I say thanks to all in the house. I appreciate you for your love. Thank you for your concern. Gifts from here and there. See, everyone in the house, big thanks to you all. You are all welcome. Thank you. I appreciate you. And also, before I continue, those that paid into the account for the materials, about 3 names, you are here to send your details for you to get the materials you paid for. Please don't forget to send your details so that my people can send you the materials you paid for. Only that your name was not showing in the account. We just saw that if somebody transfer money, if your name was full, we'll have called your name out. But if you know that you transfer money to our account for the materials, for the birthday discount, please kindly send your details so that they will send you the pack you paid for. Thank you very much. Yeah, we want to look at the market. For me, the market is becoming interesting and really good for us, especially those that are seen with their technical eyes and fundamental eyes at this point. I will start by saying we'll look at the daily charts. Look at from the daily charts, we can now move to the weekly, which I told you that this multiple time frame give you an insight what is happening and how to take action. And the numbers that also came during the week, I'll tell you they are impressive. And not only that, if you look at also the economic data that came, inflation figure was a little, we saw a slide down, which is good, but people are still complaining that price of goods are high. But the data becoming positive, seeing a 3 consecutive decline in inflation is also a good point for the economy. But for those in fixed income, I think they'll be smiling now because their rate now, or the negative return they're having, gradually coming down, and which is good for them in that market. But for me in the capital market, the inflation has no effect on us because we know that our return here, if you play it very wise, is what is above the inflation rate. And everybody wants to identify the capital market. Now that any season has started and the end is going to open a lot of investors standing on the fence, on the sideline to see what the market has for them this year. And if you are jumping in at the wrong time, you might miss the opportunity. But those that are following us on this program and those that attended the master class, all of you are already positioned ahead of this number that we're expecting. What happened? The number that was released yesterday, day before yesterday, on Thursday by UCAP, as shared in this house. Before one of our colleagues said there's a date for board meeting. We don't know whether they changed the date for the board meeting, but it all came as expected, and that tells you that you can plan with such company. And that is why I said investing with date is very important in any investment you are doing. If you are looking at volume, you are looking at the any season, when the result will hit the market is key so that you can plan ahead of it. Those that are positioned in UCAP now before this number, though you bought at 6 naira, nice at 650. If we move something around 7 naira, you have made almost 15-18%. You can click up that. That is for traders. But for those that want to invest for the dividends of UCAP, they still want to see, oh, this number has given us insight where this company is going. If we have seen, a second half result or first half result for 52 kobo earning per share, because the 1 naira 5 kobo we are seeing there is annualized number. We are seeing that for this now we have seen that this company has comfortably made 52 kobo earning per share for Q2, and they paid 70 kobo in their last year, ended the 2020 financial year. Now, even the companies are projecting that they're going to make 1 naira to 5 kobo. Would I tell you that every forecast by companies or analysts is meant to be what? To be beaten or to perform above it. That means if the company has they're analyzing it to around 105, that means around 1010, 1.15 is expected. That means this company can confidently pay you 80 kobo as dividend. And if that happens, the price of your cap should not sell below 8 naira. And that is for what? For long-term investors. But for we traders, you are not waiting for that. Now you have entered earlier. That's why I said those that ask the video on investing with earnings, any season video, if you know how to wait, you have seen that the value area of your cap is where it is now. It's almost breaking out the highest resistance level now, which is about 6 naira 57 kobo. If that occurs, so that the stock will move up, and when people start seeing this number and start positioning for dividend already, because from this Q2 number, you can just project what's expected at the end of the year, and this company have been consistent in their dividend payments since they came on the exchange. That alone is a plus for the company. And also, if you look at the data that came from them, sorry, I've not entered the market step. I'm looking at this recap. If you look at the data that came from them, you see that their numbers were really impressive. What I look for a number are two major things. If I look at your top line and bottom line, and they are positive, I go back to what to see your earnings per share, your retained earnings, and your cash flow. If you look at the cash flow of UCAP, the cash flow of UCAP, I'll tell you, is positive, moving from around 52 billion to around 92 billion for the period of 6 months. It says that they are doing a lot of business and they are making money. That cash flow law gives inside that these earnings can be sustained. But when you see a company that's posting a positive earning and the cash flow is dwindling, that number won't last. And that's why you need to look back to see that the numbers they are posting, is it any cash flow backing it? And when there's a cash flow backing that earnings you are seeing, it tells you that this company will go far. From what I just told you, now you can see that UCAP has a good cash flow and earnings are positive. That means we're going to see a sustained uptrend in their numbers. That means Q3 in UCAP is also expected to be positive. If that is at the back of your mind, that means if you're in that stock, you don't need to panic, but rather, if you are a long-term investor, you accumulate more. While traders are looking for the price to beat up a certain level that meet their target, they sell. It doesn't mean that UCAP is bad. That's why they are selling. They are taking advantage of profit, and they're still coming back because, between now and end of September, even end of the year, it's still far. They can't just run away now because they want to move to another stock. That is what to trend in any season. Any season, you don't stay put in a particular stock. That's why if you're a trader, you trade the earnings that are coming. You have made money here because you enter here. You move to another one that you're still expecting. So that before you hit the market, you're already in. When it comes, it's a bit of expectation. You jump out to another one. That is how to trade any season. Not that you are trading for dividend, but those are investing for dividends. They see the numbers that they are attractive and good and it makes sense to them. They accumulate more, and that is for the angle of the investor, so that their dividend at the end of the year will be high. For me, UCAP has shown where it's going. And also, don't forget that yesterday night, I saw Unilever releasing also their half-year result, and this number for Unilever is also impressive. And yesterday, somebody asked on our group that, what is behind the Unilever activities? I said technically it's looking good. I didn't know that the result wouldn't come there yesterday. The result came, and the number are also impressive. For Unilever to go their top line with almost 43%, and also move from a negative position of almost 511 million to 714.something million for half year is a good thing for Unilever, who tells you that the company is going somewhere. And that will give you an earning per share of 12 kobo from a negative earning per share of 0.9 for half year. But if you look at the quarter to quarter, they did well also powerfully in the last quarter. That means the last April to June. Tells that if they continue in this trend, we'll see a better number coming. And that means this company, Unilever, will gradually come out of red, and that will support their number. Don't forget that their tea business and also the foreign investor holding, they are gradually increasing it already. That means they're already seeing value in Unilever at this price. That means if you are there a long-term investor, just stay patient. For traders also, they're also looking the way of Unilever. It's the time for you to take advantage of this number before we start seeing more better numbers to enter. You're like, what really move the price of USC property is expectation of what? A positive number, and which is pointing to somewhere. When you see that positive number in USC property, it tells you, or if it is in their name, it tells you that the company is turning around. And when there's always a turnaround in any company, there's always what? A growth. And that growth is what investors are interested in. That's what traders are interested in, that growth. That means when a company is coming out of the red position to a green, it tells you that the company is set to go far. Now we are seeing that Unilever in their half-year result, they move from a negative of 511 million to a positive 714.4 million. Tells that they are going somewhere. And that means for that alone, it's a sign of where we are going. The only place I have little common in Unilever is that if you check their own operating cash flow, there's a decline from 9.something billion to 7.something billion, which is just what I see now. It is when it becomes consistent. You see, like 2 or 3 times, you know that company earnings cannot be sustained. But this is the first time I've seen a decline. Let's see what will come out from their word for the third quarter result. But the number in terms of profitability level is okay, attractive, and good. That means if these numbers are coming out, already giving us insight of what we are going to see in this second half, it tells you that any position you are taking, especially if you are in good stocks, fundamental sound stock, just hold your position and watch this number. Like I said, that any season comes with some different characteristics, which will soon start manifesting. One, liquidity will start finding way to the market, sentiment will increase, and also, don't forget, momentum is very key. It will also change the market. That means after the holidays or the new month, the new week we are entering, we'll see a better market ahead of what the MPC meeting. Don't forget that the MPC meeting is also very, very, very important to your investment decision this time. But for me, for us seeing a sluggish decline in inflation for 3 consecutive months, it's not enough for the monetary policy to change rate for now, because the economy is still dragging. The supply side of the economy is still weak until we see improvement before we can adjust what our rate, because it is not the low interest rate that are still pushing the economy to this level. If you adjust rate, you're going to quickly short-live the recovery we are seeing now. You're going to be short-lived. For that, I don't see them. And also don't forget that, look at the climate or the global environment now. I can't say I figure one economy that have really increased their interest rate for those recovering in COVID-19 and last year 2020. They are all still leaving their interest rate flat to watch where the economy is going. The recovery has not become too pronounced, especially our own that is still weak. I don't see the MPC change. Rather, they will extend their waiting to see what will happen before the end of September, where they will have another October, where they have another MPC meeting. For that, we'll see that this earnings season will change the face of the market. If that is well understood, I tell you that we don't need to panic, but rather we'll take advantage of the position we are already and solidify our position there, waiting for good numbers to come to the market. I've given you why we're expecting good number in the last meeting, because we are recovering the economy. That's why it's weak. And compared to the situation with the market where in 2020, we are going to see a better number from. But don't forget that there will also be strong sector rotation this period. The sector that's going to release a good policy number, you see investment or traders or even investor sentiment moving, because you can't stay a sector where you are not expecting much from them. You can see that the banking sector has also sustained some of momentum. The breakout that we saw the previous month is still there, still strong. Banking sector are still there. Why? Because people already seeing factors that are going to influence the banking sector numbers to become positive and more attractive. But that we are entering ahead of what, even ahead of their half-year interim dividend and full year. And if you look at the history of Nigeria market, the most consistent sector that gives you dividend is the financial sector. And now we're seeing factors that are going to drive those numbers in financial sector. I see that investors that are in that sector should just hold on and watch. And also, if you look at your charts or your chart pattern, most of the banking stocks are really telling you that they are about to fly. Or they're waiting for these numbers to come and also the liquidity to come to the market. But if we're seeing a slowdown in the fixed income market rates or fixed income market yield, we expect that the equity market will enjoy a little uptrend now, especially with this number we're seeing for Q2. That will be a plus for the market. I'm just giving you the fundamental background. That's why I'm bringing the inflation, the MPC meeting, and the corporate earnings we're seeing. But now I want to go and look at the chart, because chart represents all this. Chart tells you what, because that's where you see the attitude of investor. You see the candlestick telling what is happening on a daily and a weekly. Because one candlestick will tell you what happened a day, one candlestick will tell you what happened a week. All this will give you an idea where the market is going. Once you understand this from the beginning, it tells you that your decision will be guided and you won't miss it, because you are following the market. You are not just leaving the market behind or the market leaving you behind. As you are following the market, you adjust your position here and there and move to one sector or the other. A company that you see that the numbers are better or good, you see how to hold your position because you're expecting a better number. You don't jump out of position. That's why if you are seeing a stock within their value area, to break out up or to break down is very, very important to watch where the market is going generally before you can follow that trend. It's very, very key. You can see from the chart here this a daily chart on a MetaStock software. I'll still go to Army Broker, but I want to clear so that it becomes clear here. You see this uptrend here we are seeing here. This was the recovery before the market pull back and break down this trend line here, which is also this what we call a bull channel. And when you are doing a bull channel, the best indicator in a bull channel is to use what resistance and the support level to trade that market at that particular time. That is how to trade the market at that particular time, because you really want to know what is happening in the market. Here, you see it's an uptrend here, but the market pullback. You forgot that last week on Friday, where Airtel lost, this is the pullback that was up, and market break down this support level here. Let's say they are got the support level down, break it down. But the good thing that after breaking down, market started resisting to go down. Market is not making a higher high, it's not making no lower low, lower low going down, but it's still trying to now side trend. Market is just chopping now, moving in a side what direction, not trending up, not trending down. But the beauty of it I want us to know here is that if you take this, I want to draw a trend line now. If you look at this trend line here, from this point, this is where the market resisted for that initially. You draw it to here, this another wave, or we'll call it an uptrend, anyone you call it. You come here again, you draw this trend here down here to this level, this another trend already. Then you still come here, you draw this one from here to this level, to this point. It's also another trend line already, which you are watching keenly with all interest to see where this market is going from there. That is very important. Then you now draw this one from here to down to this point. Let's take it here. Then here, this will call we call it in technical analysis, this motive trend. That means it's going up, or the one that is moving up, call it moving in Elliott wave. But this is an uptrend that we'll see here. You now see a correction. This correction, this will call wave 1. Here, this called wave 2. This called wave 3. Already, the wave 4 was seen here. You see, it didn't touch even where the wave 3 started. Halfway was seeing a strong resistance here. That means if the market maintain this trend, we're going to like to see what we call extension 5. That is wave 5. That wave 5 is extension, and wave 5 most time is longer than every other wave here you are seeing here. That means if this earnings sustain this impressive number we're seeing, or that means it might likely move up. All depends on the outcome of what or the MPC meeting. If MPC meeting also the return rate as expected, if that work out that direction, I'm telling you, we're going to see a rally here. And don't forget that after this rally in July, you might see also a slowdown in August and early September, because there will be people who will be doing what we call portfolio rebalancing, trying to use number to position ahead of third quarter. Also, knowing that third quarter is one of the most important quarter every investor anywhere in the world will look up to, because it gives you insight to what you expected to see at the end of the financial year, that we do that have December as year end. For that, every investor from the month of October will want to jump into the market. Why those designers, design investors will want to position before even the end of September, because they have seen the Q1, Q2 of this company. That is that the slowdown we're likely to see in August and early September won't last. For me, you don't panic at that point, but rather watch your position as was going now. But if this wave is sustained, if this wave or this uptrend was here is sustained after the holiday, we're going to see another strong wave, and that will call wave 5 extension. That means it might likely even surpass here, but the fact that here has become this resistance, this support level here has also become a resistant level to a level. And also, if you look at this point here, this will call almost a double bottom, because here market refused to go down, and that level is maintaining. It didn't touch this lower figure here or lower point here this year, but it started from this point. It tells you that the market is still in oscillating mode, and when market is oscillating, like I said, you use your support and resistance indicators or technical tools to trade the market. Once you have that at the back of your mind, is that for me, the market is still early, the market broad is okay. Yeah, it's not going up, it's not going down, just are trading, waiting for a major breakout, a major information. And this information that started coming, financials of companies are key. I told you earlier that the fuel of equity prices or market are what? Volume and what? And earnings. These earnings are already corner. And also, if you look at this chart here very well, you look at this where the market was coming down, volume was also drying up. Volume was also drying up. If I draw this line here, you can see that the volume was drying up even when the market was going up. People are not willing to sell. Let me draw this so that you can see what I'm saying here. You check from here. Why is it not? Hold on, please. I'm coming. Yeah. To draw this line here, you can see there's a decline. Yeah, let me make it a colorful one. Let's make it a yellow so that you can understand what I'm doing here. You can see that, but the day that the market had a little break out, you see that the volume that came to the market where was little up. You can see that the volume came. When the market was good, that people are not willing to sell because they are still waiting for something. That is why market was resisting decline. You can see after the Monday pullback, market stay at that point, trying to maintain a side kind of a sideways or ranging market side trending, sideways movement. But before we now saw on what happened on Friday, the market gained about 0.21, which you are seeing the chart here. That means, Paul, look at what happened. So that same day, we'll have volume. And this is where, after we have seen a UCAP number, it tells you that all these numbers that are coming are giving investors an insight to what we should expect. If you also look at what happened in the first number I explained last week, the Infinity Trust Mortgage Bank, you can see that the numbers, they didn't move that stock because of the nature of the stock. But this UCAP, you can see, despite that the market is a bit slow, UCAP made about 3.20% gain. That means as people also look at this number and they analyze it, it starts going up. For me, for a company to move from a profit margin of about 43 to 45.8, is because that this company has become more efficient. Their retained earnings have moved from around 15 billion to around 21 billion. This company is too what? For me, they are going somewhere that investors should identify with them. In terms of payout, they are strong, and that payout also want to support the price. And for me, if they are going to really pay anything 80 kobo, even 75 kobo, the stock should not be trading below 8 naira. If you understand what I mean, that means if you are buying the stock at this price, you are not still making a mistake. You are taking a good position, because when their earnings will come at the end of the year, the market will be like, even touching 10 naira, the possibility is still high, depending on liquidity in the market. And if the yield of their dividend is also high, I expect the market also respond more to it. For that, we expect a lot of uptrend for this UCAP. That is way to board. You can see that activities of investors have been also represented in this chart. That is why I said earlier that you must know how to combine your fundamental and your technical analysis. You can see that all we are saying here is already represented in the chart. See market refusing to go down, but we're not seeing an uptrend. We have seen wave 1, wave 2, wave 3, wave 4, which is a correction wave. Now, if this trend is sustained after the holiday, we're going to see wave 5, and most time wave 5 is always an extension. That means wave 5, once it breaks out this point, that means it's going somewhere else, and that will be very good for the market. That'll be very good for the market. This for on a weekly chart. But let's quickly look at use Ami broker to show you something that will be interesting, and that will also help us to understand what we are discussing at this point. We are discussing at this point. Let me quickly go to the NGS so that we can see NGS. This NGS on a daily chart. You see that the strong support level here automatically become a resistance. If you are looking at this chart, you can see what this green line is saying. That means for those that want to trade a breakout, they say they will be waiting and looking at this point to see a breakout before they jump into the market. But do they understand that this chart formation here, and this on a daily chart, that there's already an improvement here, and we saw volume from that meta stock that supported this change. If that volume start increasing and the market start going up, you will enjoy it from here. But there are some people that they want to confirm, especially those institutional investors. They want to see a breakout of this resistance this support becoming resistant. Once it crosses it, they start jumping into the market. That's why I say the first task is for this recovery to break out this and see that the market resistance, it didn't touch the low aspect of it. That's about 37,805. The market didn't get there. It get to around 37,854 and it reversed back. It tells you that this market is not ready to go down. Market is looking to go up. If market is looking to go up, it's the time that every investor in the market should also be interested to take position and move with the trend of the market. Like I always say that market movement has 50% influence on price performance. If the market is rallying up, it has influence on what? On price performance, and those prices also will look with the trend of the market. That means for those that want to wait for them to trade a breakout, you have to wait for it to break up. But for those that are already in a good stock and market is recovering, you watch your position as it's going. Now that we have seen a sign of recovering from this point, and this is how to look at the market on this daily time frame with all this buy and resistance level and support level. Once market break out this point, you can see this straight line here. This has been a strong support level, but now it has turned to a resistance because market has broken it, came down, reversed and went up. See, it came down, break that same. Now market didn't touch the lower point that after trying to do a reversal here. Now that market is strong here, until it break out here, that is where institutional investor would like to jump in. But for those that are charted day traders, you have seen already a reversal sign on a daily chart. You have seen already, I showed you the volume that supported that signal. Then you wait for Monday to see that this trend is maintained. But I'm telling you, most institutional investors in the market will be waiting for this trend now coming up to break out this support level that has turned resistant before they can start jumping into the market. And as I said, if this number was seen, is sustained, and the police are going to sustain it is high, because when you compare the period we are, with the downtown we saw in 2020, despite that period too, company posted good number. With this little recovery, we are still coming to sustain that momentum, that performance. If that is maintained, I see the market breaking out this resistance and continue the uptrend. But as I just said earlier, the outcome of the MPC meeting will also be a plus. But I don't see like the MPC changing anything at this time, because the economy recovery is too fragile and weak. If they do that, it's like they're going to short-live the recovery was seen. But if they really want to go, because I said it, the supply side of the economy is still weak. It's still weak because of with all this devaluation here and there. It's also affecting the production aspect. Insecurity is also affecting it. But now that the government is raising up to make sure that they tackle insecurity, you can see that they are even paying up, they are bringing more equipment. That's also a sign. If you can see a reduce in insecurity, and also they able to put where the dollar exchange and the exchange market is going, from the monetary policy, and we're going to see a good recovery going forward. But for me, if they adjust any interest rate at this point, that will short-live what we have seen so far. For that, I don't see them adjusting rate in their next MPC meeting. Also, don't forget the style of this leadership, this CBN governor. You can see that it's always find it difficult to adjust even NPR at different meetings. He loves how to watch, But for me, I don't see him adjusting anything at this coming MPC meeting. That's the way I see it for the market. For that, we don't need to panic. Well, let me quickly go to the weekly chart before we go to question and answer. I know that people have question and answer. Also, if you look at this chart here, sorry, what's still on it? If you also look at this chart that has been displayed, this chart that is displayed also give us an insight what what we should also expect for the week. You can see that the market is still, let me draw this chart here so that you understand. It's still consolidating within this range. It's a C-band range bound market. The market has not broken out. If that is what we are seeing, what I'm seeing, if you draw this this here down, you can see that market is still on the range, but it has not broken out from this range band, this consolidation level. If we are seeing an uptrend, but if you look at the candlestick formation for this week, it's also what we call in technical analysis a hammer, because the market is coming down, and we are seeing a hammer forming, and after the last week loss, and can see that there's a lot of reduce in the loss about 0.12 for this week, and market resisting going further down. It touched even at the rate, at the point here, this strong point here, and still went up that same week. For that, it's also a sign. That means we need to watch out what the market will deliver in the new week we are entering. But with all these technical indicators and the event of food in terms of fundamental aspect of the market, I see that the market will maintain an uptrend, especially after the outcome of the MPC meeting, if the rate is maintained. And I said earlier, these strong numbers will give insight, and price will respond to earnings. Anywhere, anytime, on the long run, on the short run, price will want to find the direction of earnings. And you see that before now, there was a little divergence between earnings and price as at the end of first quarter. But now, and we're seeing that in second quarter, already adjustment. That adjustment will likely sustain in going forward. For that, we don't need to worry ourselves. Rather, just to keep our mind at rest, keep our eyes in the market, because you can't invest and go and sleep. You need to know what is happening in the market. And these numbers that are coming are giving us assurance, insight, where we should see the price of these stocks. I tell you, liquidity will gradually start finding their way to the market. Even when the market was on the negative end of the week, if you look at your week daily chart, money flow has moved across the 50 points again, now around 53 points. It tells that funds are really coming back to the market. All you want to do is just start patient. And don't forget, I said earlier that there are characteristics that come with any season. That is where you see, inflow of funds. Liquidity will improve, fundamental sentiment will improve, and the momentum will improve. If this is what we're expecting, we don't need to panic at all, but rather hold our position. The numbers we are seeing as the one that came from Unilever, the one that came from United Africa, and even from the initial one that was the first to open the earnings season, Infinity, they are all positive number. It's also a sign or a signal where we are going. For that, we don't need to panic right now in the market. All we're looking at, let's see the outcome of the MPC meeting. Thank you, and God bless you. Any question from here, or you want to add to the market review, you are free to make your own contribution. Yeah.
Can you hear me? Hello, Ambrose. Hello? Hello? Hello?
I can hear you. Go ahead. Yeah.
Okay. Yes. Thank you very much for the presentation. But I have 3 questions to ask.
Go ahead.
Number 1, CBN recently, in fact, yesterday, placed a ban on importation of sugar, allowing the license for Dangote sugar, Boa sugar, and golden sugar.
Okay.
For the importation on the ground that they have complied with the backward integration of the federal government.
Yeah. Okay.
Yeah. So what's the implication on that in that particular sector?
Okay.
Then the second one now is India reducing the importation of petrol, crude oil supply from Nigeria. And Saudi Arabia and the United Arab Emirates agreeing to supply increase. What's the implication of that? Because definitely price of crude oil might come down when you have excess supply in the market.
Yes.
That's
second one.
That's yes, that's the second one.
Okay.
Then the third one now is the position of the market. I saw the report from UCAP, which you have already touched on. So what do you think about that, the UCAP? Is it one to buy or hold, or at least exercise patience? Please just look at those areas. Thank you very much.
Yeah, I will start from UCAP back to the other question. Like I just said, if you're a trader in UCAP, you have entered before now, when you to move up, you can take your short profit. For investors in this group, you can accumulate more of UCAP because you are dividend or income investor. But for those traders that are looking for margin, you have entered early and it has gained us 3.2% at the end of yesterday. If that is sustained and move above 7 to 750, that is giving you about 15 to 18%. You are free to come over short term. But for those that are looking for position for dividend, this is time to start buying the stock because you are giving the results are giving an insight what you expect at the end of the year. And this is a company that their dividend is consistent. That's for that. But for the crude oil thing, let me say the crude oil supply, you can see that OPEC in their meetings, they have not agreed on cuts. They are still about because of the US, America demand and the flow that is over there, they are about to be what a little scarcity of crude oil. And also when economy is recovering from a down position, yes, I admit they are India reducing their own. Saudi Arabia want to open up, increase their their crude supply. But don't forget that when economy is recovering, those that are before now that are knocking that they are all open the economy, they will need activity to come back, and they do this so that their productivities will be high, especially their manufacturing sector where they need to heat up their system. For that, yes, it was delayed, and it has been oscillating. It was delayed, but for me, for people to trade anything above the 50 days moving average in that regard, and that is when it comes back. It touched around that kind of 72. That's 50-50 moving average for the commodity. That it will bounce back and up again. But if you go below it to around the $60, $65, it's still another. But when the economy sustains a recovery globally, there will be demand for crude oil, no matter the supply, because it's their activities that we're seeing now. That flood in the US also is also a plus for crude oil market. Let them be oscillation. For oil to touch as high as 77, I even projecting that before the end of next week, oil might likely touch 80 before it start coming down. As you just said, it will be oscillating. There's no cause for alarm. For the license for sugar, it is expected. And what the federal government said is they are right, because these companies are compliant to backward integration. Then why are you importing more? Let's grow what we have and use it to expand the economy. Let's start, stop import, because import is also affecting our reserve. You can see that that's why the crude oil price is going up. It's just recently that we can see the impact of crude oil, because we are using it to support our exchange and all those exchange and foreign exchange market. But if there is less pressure on foreign exchange market, we will see our reserve coming up powerfully. For me, what they have said is important, and also give you an insight to where you should put your money. The stock like Dangote Sugar at this price should show that they are going to see a better number from them going forward, because they are going to be sourcing their raw materials within, and that will also boost their bottom line at the end of the day. For me, I see opportunity in there. That's why I said those companies are into flour related business, that no matter how hungry or how poor we want to eat, that means you can see that they are all kind of consumer goods sector. That sector have also suffered setback before now. I said there will lead to improvement in that. With all this going to happen, with all this reform we are going to see from the federal government, like this ban on importation. Also, don't forget to stock like Presco and Okomu. There's a bill that will soon come out that there's some liquid content that federal government also want to ban in the economy, so that we can look inward. If that's also, but that's going to be a boost for all those like that into palm oil and other bottled companies like water and all those. These are the things we are looking at. If all these policies are put in place and implemented, it's going to boost the manufacturing sector, because if you are bringing something from outside the world and come and give us here, bringing concentrate from there and come and give us here, we're not creating job for other people there. Let's bring it and do it here and turn it to water here. And that is what means everything will be done within Nigeria. That will also create employment for our people. For me, the government are in that direction, only that their policies should be consistent. Yeah. Another person I want to add to it is free to add to it before we move forward to another question. So I've gotten your answer to the third question you have asked, Mr. Z. Steve. Hello, House.
Hello, Ambrose.
Sir.
I just want to highlight you for, even though
okay, sir,
the India reduce the crude oil that they take, remember Nigeria, we do import from other countries.
Okay.
And it is the interest of all those countries that do business with us, they also see that we reciprocate.
Okay, sir.
And it's an ethical business. Today, if we are demanding more product from India, India have no choice than to take, China. Then China have no choice than to take our crude oil than any other country that will only supply them the crude oil without taking their product. So everybody wants a counter product.
Okay, sir.
As regard to the sugar, I believe that Dangote sugar is going to go high, because this backward integration is what makes the Boa cement, the Dangote cement today excel. So you remember Boa, they have Boa sugar, but it's not coated.
Yes, sir.
But the Dangote is the only sugar that is coated. Well, the flour mill have sugar, but their sugar is within the flour mill.
Yeah.
So flour mill is the target and Dangote sugar is the target.
Yeah.
Because the system will make them to go better than where they are now.
Yes, sir.
So good to buy them.
Yeah, thank you very much, sir. Thank you very much. I appreciate it. Any other question in the house? Hello, house.
Hello.
Yeah.
Hello.
Okay.
Hello. Good afternoon.
Hello, go ahead.
Good morning.
Yeah, good morning.
Afternoon. Yeah, well done. Thank you for the presentation, as always. Actually, I have two questions. One is, I don't know where I've seen a steady increase in the stock price of late. So I don't know, where are we going from here? I just need your take on that. And then secondly,
okay.
Yeah, then secondly is Mansard. You know, especially some people like us that want to take risk a bit sometimes. So I've seen some decline in performance. So I don't know, what is your take on that?
Okay.
These are just the two stocks I wanted to get your expert opinion. Thank you.
Oh, yeah. For the Mansard, I would say, for me, Mansard is even cheaper than most of the stocks in the market, in that sector, in that insurance sector. If you see Mansard selling for 87 kobo, you see them at 2 naira. It's because the delay in their construction is what investors are waiting to see. That's why people are sitting on the sideline for that kind of stock. But the stock has potential. Let me take you one thing I was thinking out. If actually the holding company of GTB want to, don't forget that before now, GTB has a kind of a holding in Mansard before now. And now they are going to go into holding company. They want to go into pension, into insurance, into what's called fintech and all those. It nothing stop them from even going back to buy into that company. Well, I'm not saying they're going to buy to the board. Look at the foreign investor that is holding in that company. They are not panicking. They are not selling. You know that what they're going to see at the end of the shared construction will be better off. That's why they are still waiting. For me, the price is good for those that want to buy now. I worry that the construction that we're expecting is being delayed in that angle. But for me, there's nothing wrong with the company in terms of their first quarter was okay. We're looking forward to see their second quarter. It might be that after the second quarter hit the market before they go ahead and do the shared construction. But I believe that their numbers will support their price. That means either you wait to buy after the construction or you take position now. Because if it's selling for 87 kobo and the construction is 144, the price will jump to around that kind of 360 or 370 before it start adjusting down. But don't forget that most of the companies, which I always say in this meeting, that it's only few that have constructed and they are showing stability. Little, I can see that Lasaco that did that recently. I can see little stability coming, but I don't want to say anything more. I want to study that construction. But Stanbic have differentiated themselves since they constructed the price have stayed above their construction price. But if also Mansard will do the same thing and they sustain it, that means that will be good for the market. But the recent one we're looking at is the Lasaco, which was around the 190 or 178 kobo. It came down as low as 120 and rebounded back again up. For me, it's a good one. Let's watch and see. There's no cause or any panic for Mansard. But for the general market, you are seeing prices are going up. For me, not all the general market prices are going up. There are some few stocks that are making an uptrend. But because there will be what we call sectoral rotation, because of this anything that we're seeing, investors are bound to move from one sector or the other where they see better opportunity and better upside potential for them to make money. But for me, you have to know your own investment goal, which area you want to be. The index is not making lower low, it's not making higher high. It's still like side trending now, waiting for a trigger. And the first trigger that will come is these financials who are expecting the market, which are started trickling in gradually to the market. Once we see most of the major sectors releasing results and these numbers are positive, we're going to change the face of the market. That means you need to position ahead of these earnings, which I said earlier that there's a video that we did in Investor. We'll call it Invest Properly with Any Season. If you have that kind of video or material, you know how to be in the market, because when there's always a value area between the support level and the resistance level, that value area will tell you where the stock will be moved from there. Is it moving up or down? Because you have seen the earnings season. But also don't forget, as I taught them in the last masterclass, you need to also understand your volume. I said volume and earnings are the fuel of this market. If a volume in stock is increasing, you need to know why it's increasing. Is it market going up or down, or the stock going up or down? Once you know how to use this volume and this end that we're expecting, you can be in the right stock and you enjoy the market going up, or even a stock that you can equally cut loss and move to the next one that you see that is opportunity. That is how to invest. For me, there is no cause for alarm. The market is still strong and healthy at this position it is now. No problem. Yeah.
Hello, good afternoon, Mr. Ambrose.
Yeah, good afternoon, sir.
Yeah, with the afflux of fintech companies in Nigeria now, okay, is there any hope for Shams and e-Transact? Because lately this week, I believe that Shams was on offer, and no one was buying it. Or I believe, how will I say it?
There was volume in that stock. I noticed it too, but I will tell you, they were not gotten even enough fintech companies to compete with each other. They are all going into the industry newly here. I see it's a time for even this Transact and Champ to sit up and bring their technology up so that they can compete for available. That should not be a threat for them at this level. If really before now we're using Champs and e-Transact for most of the banking transaction here, it is now they should do more and extend it to other financial sector, not only the banks, so that they can see that their activities up. But for me, all those low cap stock, well, I'm always very careful when I'm investing, unless I see information before I put money in such a company. But also don't forget that most Nigeria technology companies, they are not serious. But I believe with a company like GTB trying to go into fintech, trying to bring a product that will be used in West Africa and beyond, if they are the kind of commitment they have in other things they are doing, if GTB can implement it, they might shine every other one that's on the ground. It depends on the management of those companies. It's time for them to sit up and up their game. Yeah.
Thank you.
Hello, Ambrose. Thank you very much for your presentation. Okay. I have a few observations about our market. Sad to say, our market is not very efficient. It's just an irony that no matter how the other stocks are doing, no matter how well, rather, the other stocks are doing, the activity of the so-called Big Four will continue to bring the market down. You will agree with me that the all-share index posting about 50% return last year was predominantly championed by about 4 stocks, right? Yeah. Now, the other stocks, you can see the report or the results as posted by UCAP, very fantastic result. You can also see, I saw the Q1 result of Fidelity Bank, fantastic result, and that is why Fidelity has not dropped since then. Access Bank also posted fantastic Q1 results. I agree with you. Yeah. So now, despite all those fantastic results posted by these guys, just a drop in Airtel Africa dropped our market. Yes. A drop in Boa Cement would drop our market. A correction in Dangote Cement would drop our market despite the upward movement of these other stocks. So if you ask my opinion, market is just reacting to profit taking on these big fours. Big caps. Yeah. So if I'm a trader, I honestly will not concentrate on all share index because it is a facade, it's a mirage. I will concentrate more on these other stocks that did not do so well. Okay, for instance, Zenith Bank got to 28.50 last year. And Fibonacci retracement, 50% Fibonacci retracement shows that anywhere between 20 and back is good. Good, yeah. So I would rather concentrate on stocks that have retraced maybe by 50% Fibonacci. Yes. I will invest in those ones than concentrate on an Airtel that got to 930 and refused to come down. Yeah. And as such, market is now acting like market is okay. Now, we are currently seeing -5, -6 on all share index. And that is largely because the ones that took us to 50% have refused to correct. No, they are coming down. They are coming down. They are coming down, but they've really refused to correct. Look at the volume traded on Airtel Africa, for instance. Yes. You'll see that sometimes it's only 47 units they will sell. That is no correction. And exactly. And once that happens, the true picture of all share index will not show. So for me, let us concentrate more on these other stocks that have really retraced and position in them to make money, and forget all share index because it's highly hinged on the cap stocks. Yeah, that's my opinion. Yes. Thank you very much. I love that, and I have emphasized on it on this program that the all share index is just a guide. You should look at the sectoral index. Like you mentioned the banking sector now, you mentioned Access, you mentioned Fidelity. Go and check that banking index, that banking index. I see that it has broken out of consolidation level. It says that activities has really improved. And if you look at the MACD of Fidelity, MACD of Access Bank, Zenith Bank, they are opposite to tell you that these banks are going somewhere. And don't forget that their numbers, as you mentioned, are good. Like what I said in the last meeting, if you remember, that when you see
a rising price, a rising earnings, and up market. It tells you that this kind of stuff we look at. And this is what we discussed in the last masterclass. Once you have it at the back of your mind, you will move with it. We are seeing a rising earnings in Fidelity, rising earnings in Access Bank, in Zenith Bank, and other sectors like in a stock like Presco, Okumu. No, when you are seeing earnings looking up, price looking up, that's where it should be. What will move Vitafoam to where it is, apart from this question that is doing now, is earnings performance, and people have to price it into the price. That means you as investor, don't be carried away by index alone. Look at the sectoral index and individual stock, especially when they have the upside potential to go up, and the numbers are there to support them. Don't forget I said that no matter what's happening in the market, on the long run, on the short run, price will respond to what? To earnings. If earnings are good, it will drive price up. But if earnings are bad, price will look down. Another question? Yeah, there's a...
Ambrose, good morning, Ambrose. Good morning, Ambrose.
Ambrose,
Joseph.
Okay.
I'm Joseph.
Okay,
You
Joseph.
mentioned, you spoke about Mansard. You said Mansard is very cheap at about 79 or 89 kobo. I would like to know the criteria that has made you to decide that Mansard is cheap. Are you looking at book value? Are you looking at net asset value? Or are you just looking at the present earnings or future earnings potential?
We'll look at
But I still have other things to talk about, please. Right. You also mentioned that the major things that determine prices are earnings and volume. It's like you focus a lot more on earnings than volume in your class here. Another thing I'd like to speak about is there are some companies, there are some stocks that have just remained static in the market. There has been trading on them. One such stock has experienced a lot of decline over the past 5 years. MRS has been at about, it fell to about 11.5 and is about 12 Naira now. I'd like to ask your opinion on that stock.
Okay.
Then you tend to focus more on blue chip stocks. Blue chip stocks, you have been talking about sugar, banks and other things, but there are so many other stocks that have been performing beautifully well in recent times. Okay. We've seen a stock like John Holt.
Okay.
Nobody speaks about stocks like that. What is the reason for the great appreciation in the past 6 months in John Holt, for instance?
Okay.
So I'd like you to be much more broad in your analysis. Don't just limit us. And when you limit your class, some people just buy your opinions, hook, line, and sinker, and they don't look at all those other fringe stocks that are making money in the market. Thank you very much. I'm Ambrose Joseph, experienced investor, 10 years.
Let me attempt to answer the question. Let me attempt to answer. I know you put the icing on the cake. Okay, Joseph. I don't know. Maybe you're just joining us. One of the driving principles of this particular class or academy is the fact that we trade fundamental stocks technically.
Exactly.
So what we have done is we have learned how to identify fundamentally sound stocks. Now, those qualities are the same qualities he has enumerated in some of his videos that he has made available for anyone who is interested to pick up. So maybe you can reach out to him together. But what I know for sure is that are fundamentally sound stocks, you can never go wrong with them. And once you identify those fundamentally sound stocks, how do you trade them? That is where technical analysis comes in. So we don't want to see it is true that market may be ranging, and the likes of ABC Transport, the likes of John Holt will be appreciating, but you cannot really tell fundamentally why they are moving. My brother, it is not out of place for you to do your own DD and invest in those stocks, but you will not come back to the academy and say it was the academy that recommended that. So I do the same. I trade fundamentally sound stock on one hand. I look at some of these other stocks in quotes. I take position in them with maybe small money. That one, I know I am the one that decided to do it, not necessarily because somebody recommended it. But here in the academy, it is purely fundamentally sound stock that no matter what happens, you would easily get out of it without getting your fingers burnt. Ambrose, I don't know if I spoke your mind.
Yeah, thank you. But let me add to the question and also that you understand better. You know, if you have followed us, as you just said, I said that this year, 2021, that the market is likely to close positive, but not as high as as we saw in 2020. And I gave reason. I said those low cap stock and medium cap stock that do not rally in 2020, at least their year, because we are seeing a change of pattern, a change of investment environment, and that will kind of trigger interest in those sectors. Which you know that last year banking sector was almost like the least in that rally. They didn't move. But you can see stock like Dangote, Ete, all of them were up. Boa. But now you can see that factors for the banks are coming out. And I tell you that in anything you are doing in the market, major thing that you need to look at, if stock whereby there's no volume, you won't go find that stock. If stock whereby there's no earnings, what's going to be? Because nobody will give you what they don't have. If a company is not bringing a better number, you can't expect a better dividend from them. That's why I emphasize on what volume. Technically, I'm not saying volume of when I say volume, I'm doing technical analysis to trade that volume. And when I say earnings, I'm also using earnings because this is what market feed on, price feed on. If I feed on earnings, they need to have to play. That's why they say every fourth quarter of the year, we have what we call masterclass that we use to take advantage of those prices and how to move. That means if you really want to benefit more from us, like you are joining us newly, you need to join us more so that you learn the principle. I don't neglect any company analysis, in this platform, but those that I know that they are fundamentally sound and also we can trade technically. But I said you choose your stock. So what we call watch list with your technical analysis, with your fundamentals, sorry. Do not trade them with your technical analysis. You don't know how to combine the two together. Combining the two makes you what an expert or make you an experienced investor. Not that you are standing on only one fundamental, one leg. You must stand in with the two legs. You know how to use your fundamental and your technical analysis. That is why when you are choosing your stock, this stock is good fundamentally. Put it there. That is what we call a watch list. Then you know the price to enter, the price to exit is what your technical analysis will help you to do. And also to manage your risk is what company is going to use you to do. That means you need to have to combine the two to make informed decision. Those local stocks, they are good, but most time, go and see the institutional investor, smart money don't invest in those local stocks. Because if they put their money there, they don't want to prove it up, but they want to put their money there. For that, they need those stocks that are marketable, that has volume. That is why banking sector, you see, because they have large share in issue, you can trade them in and out. No deal that you want to sell a banking stock, you say it's not available in the market. No. Or nobody is not picking it. No, but for those small cap stock, they want to sell, nobody is ready to pick it. You'll be standing there because the market makers here in Nigeria, they are not active, or they are not active in the market for you to say they are going to pick it. No, but these the blue chip stocks that you see that have activity in them, you can do trading on them. That's why if you also have another access to another product, I said this shareholding structure also is a plus for most of the companies on the exchange. If you understand how to use shareholding structure, it's about your level of understanding. I know that you are an experienced investor in the market, and what you are saying, you are right, but we have different strategy of investing in the market. Hello.
Hello, Ambrose.
Hello.
Yeah. Hello, Ambrose.
Hello.
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 Hello, I'm with you. Go ahead.
Yes, I want to add to what you have said. Mr. Joseph that just spoke. We in this academy are taught to follow the smart money.
Yep.
And when you are following the strategy of the smart money, there is no way you will not make money. Because most times they control some of those big organizations in terms of earnings, in terms of dividend and all that. So I think he's just joining us. And what we are looking at is to follow the smart money. That's the strategy we are following. And most times smart money don't go for those that do not have fundamentals. They know what they are doing. Most times they come around 2 o'clock. If you are trading the market on a daily basis, all of a sudden between 2 and 2:20, if you see a market losing, all of a sudden it start gaining. Or you see a market gaining, all of a sudden you see the market start losing. So, Mr. Joseph, please, you just have all this at the back of your mind. It's not as if we don't like those stocks, but the aim is to make money. You need to increase your wealth and make profits. And the smart money people, they know how to do it very well. Also, then, Ambrose, I want to ask 1 or 2 questions. I suddenly saw police microfinance gaining, and what is happening to Access Bank? It will gain, it will lose. I don't understand. Then WAPCO, I don't know nothing is coming out from WAPCO. Please, can you look at those things? Thank you.
Yeah, the 3 stocks you mentioned are solid companies that you should watch. You said it that companies you mentioned, they are fundamentally sound stocks. What you do just to wait and see what is having those stock. For me, for police microfinance, initially they are planning to do right issue, which they came with a circular Later, I saw that well, it's public offer on it. They want to do public offer. But I told you earlier, Anissa, that if such company, if you're a long-term investor, go ahead. But for trader, you might slow down now because they want to finish the activities before you can see the metric rise in price. But I said it earlier that if they are doing public offer right issue, they are also increasing their share in issue. Who they need also to double their performance. When you double their performance, that is where you will not see what a better earnings. But after increasing your share in issue by either public offer or right issue, your earnings, your performance didn't double your earnings. It will dilute your earnings, and that will not influence your price positively. That means if you're that kind of stuff, a long-term investor, you still wait and watch and see what they come at the end of the day. As I said that before a company can go into right, they have purpose of going to right. They have what they want to achieve in the morning. If they want to buy more equipment, that will help them to reach out to more customers, to make their operation easier so that they can spend less to get more. It's okay. That's why we want to see the outcome of their outcome of the primary market, the activity they are doing going forward for MPC. But for Access Bank, it's natural. Access Bank have break out from 860, touched as high as almost 10 naira, 999. It came down. It's trying to find what a support level and a bounce back. Don't forget that Access number is very strong, and also we're looking forward to their trade dividend. And we'll see activities of Access here and there. People already coming back. Access are touched as low as 9 naira. 5 kobo. Obviously, it was up to around 920. Tells that there's improvement in assets. For me, there's no cause for alarm. Asset is just oscillating. For WACO is a stock that you should hold if you are there already. Don't forget that what is happening in the economy, that there is this economic, what's called infrastructure gap in the economy, which the federal government and also private sectors are trying to bridge by trying to improve the housing sector, kind of control small road and all those stuff. For that, the demand for the product of WAPCO, Dangote Cement, and BOA is high already. And don't forget that they also increased their price last quarter, last year, December, which their prices are still high. And there's demand for their product. And construction is going on here and there. I see a lot of opportunity. Also for WAPCO has tried to close, and look inward. Close activities that are looking inward. And inward, they'll have their own strategy that they want to play. You want to see their number first. If you're WAPCO, you don't need to panic, hold your position. And WAPCO, for me, is a mispriced stock in the sector where it operates. For me, I see that stock to still come up to as high as 40, 50, in the nearest future. For that, if you are there, just hold on. Let's see their Q2. Their Q1 was not too impressive as well, but let's see how the Q2 is going to look like. If that Q2 beats expectation, you see another rally in WAPCO. There's no cause for alarm in this three stuff I mentioned. You are that, cool down and watch them.
Ambrose.
Hello,
Yes,
can I
sir.
hear you? Hello.
Yeah,
Hello. Hello.
Hello. Who is speaking? To one house. Yeah. Okay.
Who is speaking, sir?
Oh yeah, go ahead.
I should continue, sir.
Yeah, go ahead. Yeah.
Please, so I just need your help. I am hooking a Ikeja hotel. Just for 2 weeks, the price was going up and up, so I decided to enter in. So my average price is around 39 kobo. I don't know, maybe if I should assist now, because I have almost 40% of what I used to trade on it. So I don't need your advice on what to do, sir.
Okay, for Ikeja Hotel, when the rally was going on, I said it on this program that it's just a sentiment in the market. But I've not seen what moved that price up. When such sentiments like you don't overplace your target, you make little return, especially when you are trading a store that has no fundamental. Now you can see that they are just coming out, all these hospitality companies, hotel, they are just coming out from for the recession where most of their business were in red because of COVID-19 and all those restrictions. But it's not that they are breathing now because of the vaccination and places are improving. I don't see magic that the earnings will change overnight. But now we are jumping. I will advise that you cut your loss. Cut your loss and move to all those companies that you are expecting their earnings to be better and start positioning now. Because if you are waiting for the earnings to come from that company, the earnings will not be attractive to move the price up the way it rallied before now. When sentiment is moving the stock, it can move like wildfire. But when that sentiment is off, the stock will be dragging. Unless the company come out on also a better number or another information that will trigger the rally. For me, I would advise you cut your loss if you are in loss there and go move to another stock.
Thank you, sir.
You're welcome. Yeah. Hello, hands are up here. Another hand that here, his hand is up, and another one. Okay, the two ones have asked that question. There's only one that's remaining. Yeah, that is the hand up here. Please, you can ask your question so that we can start winding up the day because it's already after 1. Our meeting is at 12 to 1. Ask your question before we start winding down for today. Good afternoon, sir.
It's Salis from Abuja.
Salis, you are welcome, sir.
Yeah. Please, can you show the chart for AICO? I'm seeing something.
Okay. Let me call up AICO chart now. So let us see that something you are seeing there. Because I'm not looking that way. Let me call up that AICO chart. Just hold on.
Yeah, and what will be your take on AICO?
AICO, for me, AICO selling their backbone, which is the pension to FCMB. Yeah, the numbers I'm expecting that company, I'll tell you that I'm not expecting something too fantastic that will support the price. They might be seeing up and down movement, but a better number that will move the price above 120, 130 is already lacking because of the sell-off they did their major brand. I know that is their strength since they sold that one off. I want us to make sure that we are taking control of that they have sold this one off so that you won't just be there and be waiting. You need to know why you are in AICO. AICO has also increased their share in issue heavily. But okay, let me share the charts. And all these insurance company, I already trade them when there is information. And we're already in any season. If the earnings are good, fine. But if you are trading it for any season, you can still hold on until their number hit the market. If market react to their number, you can quickly come out. That is the way we should trade the stock now. That's the way we should trade the stock now. Okay, are you seeing AICO chart here now? Okay. Hello?
Yes.
Yeah, this is AICO chart. I want to go back to the daily chart first before this end. Okay, this is the chart here. This is the daily chart of AICO. This is the candlestick performance. It had yesterday on Friday, it was flat. It can see that it has trended for a long time, resisting decline from this chart we're seeing here before we saw an uptrend. Before this one now. That means this kind of stock, you have to also be very careful when you are trading it because what will push it is this earnings or other information. But for me, for them to start selling their pension, it's not too good for them. I don't know what they want to do with the money. It might reflect in their book that they made money, consequently going to the future. But insurance company that has pension at their back, I can say yes, completely go and invest in them because at the end of the day, these PFAs also play the market where they make more money and other thing they do. But for AICO to decide to sell off I don't know their own strategy, but for me, it's not too heady for them. But if the numbers we're expecting also beat expectation, there might be likely reaction and move up to around that 120, 125, but it's not to push it. For me now, I'm not recommending the stock for now. AICO for now. It's not among my stock I'm recommending for investors for now. Yeah. Are you there? Are you there? Hello?
Hello?
Okay.
Yes. The divestment from AICO, I thought it's like 50%.
Okay.
And is FCMB having any influence on AICO?
AICO sold their own pension to FCMB. FCMB already is a holding company, and they have security, other business. This to boost their own. For me, I will seek now. My eyes on FCMB already because the way they are going, they are solidifying, trying to put in that boost their numbers. If that's a thing, the reason they need to do in FCMB is to change their paying strategy, their reward strategy. They are too conservative. If they can lose up well and pay investors well, the price will soon rally because the way the company is going, FCMB, the group is going, they are solidifying, make sure that they boost their rewards, their revenue angle to grow their bottom line. And for them to go into AICO to buy, they know why they are buying pension from AICO. Me, I will still invest in FCMB than invest in AICO at this point. Hello? Are you there? Hello?
Yes, we are here.
Okay, thank you. Yeah. Okay, for this week, we are waiting for signal to come. We are not giving any stock this week because we know that it's only on Monday we are trading. We want to look at what will happen on Monday. Then on Thursday, on Wednesday, we can come out the signal. I want to see activities of what happened on Friday. I want to see how the market will move on Monday before the holiday. After the holiday, before we can give any signal. For today, we are still holding a position that we gave last week on this platform. Let's hold our opinion and watch, because we are seeing that Access Bank among the ones we are watching. Let's see how they're going to do in the coming week, especially after the MPC meeting. That's what I'm looking at. But for those that in all the position we have discussed here, let's watch. Today we are not giving any new position. We are going to watch all the position we are already now. Let's watch our position for this week. I know that the week is already half. 2 days is up holiday. We have only Monday and today. Let's watch our position in the new week that is coming up. Yeah. Yeah, let's before we round up, let somebody also pray for us as usual. We started with a prayer. Let a Muslim brother in the house pray for us. A Christian sister pray for us when we're starting. Let somebody pray for us to round up the class for today. I appreciate you all for your time. Hello. Let a Muslim brother pray for us, a Muslim sister pray for us. Yeah.
Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Ar-Rahmanir Rahim. Maliki Yawmiddin. Iyyaka na'budu wa iyyaka nasta'in. Ihdina siratal mustaqim. Siratal ladzina an'amta alaihim. Ghayril maghdubi alaihim waladdallin. Amen.
Amen. Thank you very much.
Mr. Ambrose.
Yeah,
Mr. Ambrose.
Yeah.
Before the last prayer, I didn't hear this. You didn't tell us anything about stock pick.
No, I said for this week we are watching our position. No stock pick for this week. Yeah, because next week we have a holiday, like 2 days. Let's watch the market.
Yes.
Okay.
Thank you.
Yeah. Thank you very much. I appreciate you. Have a nice day. Enjoy your weekend. Yeah.
Thank you. Thank you. Have a wonderful weekend.
Salah. Yeah, thank you. Thank you.
Thank you. Hope you are rocking the new age, Mr. Ambrose.
Yeah, thank you, sir.
Thank you, Mr. Ambrose.
Yeah, thank you. Yeah, thank you.
Bye.
Yeah, bye. Yeah, cheers.